Now, let's bring in Naomi Fink, Chief Global Strategist with Amova Asset Management. Good morning to you, Naomi. So markets appear to be embracing what some are calling the Takaichi trade, with stocks at record highs, bond yields rising, and the yen weakening. Do you see this trade extending from here, and what risks could cause it to unwind?
So I think there's probably a little bit more room for nuance when it comes to translating the political results in terms of market reaction. Of course, to begin with, as a reflex, then markets are probably looking at the prospects for greater fiscal easing, and then translating that to stronger stock markets. However, there are some nuances that we can't forget, and one of those is the reaction of the bond market as well as foreign exchange. Now, one of the concerns, especially on the longer end of the bond market, is for longer-term fiscal responsibility. We saw that when we heard propositions for a cut in the consumption tax, albeit a temporary one. We're in a different environment than we were at the start of Abenomics. We actually have inflation underway, and inflation is typically what the central bank has to deal with, not so much the government. So I think the question might be, how much can the government support the economy without getting in its own way when it comes to inflation fighting, which is, after all, the Bank of Japan's role?
And also, Takaichi is likely to read this victory as a mandate to push ahead with tax cuts and higher defense spending. But those plans have already unsettled markets. So what will investors be listening for in her next remarks to judge how far she's really willing to go?
Well, I think what's probably correct is that the electorate has given Prime Minister Takaichi a mandate. However, mandates usually also can translate to political capital, and that means the ability to take risks that you might not otherwise take. Perhaps the risk right now worth taking is to really study and delve deeper into the nuances surrounding the Japanese economy and not just try to win additional votes, which is not necessary anymore. The LDP already won a pretty good mandate. So perhaps now the real work begins. And it is really getting that balance right of giving the Bank of Japan the freedom to control inflation, as well as providing the temporary measures necessary to fulfill at least some of what Takaichi was elected to do.
So for investors, could her post-election messaging add to the volatility, or this is now a moment of reassurance?
So I think that on one hand, as I mentioned, there is greater political capital. So there probably is more room now to even, expend some of that political capital and not necessarily just engage in populist speak. On the other hand, I don't think that it's just the election or Prime Minister Takaichi or dollar yen that is the font of volatility. We're in a situation, if we look at markets worldwide, where markets are getting a little bit jumpy, especially given where valuations are in a lot of U.S. stocks, but then also we saw what happened in the metals market and with cryptocurrencies. I don't think we can rule out volatility, whatever the cause, going into the next few quarters. I think we're probably going to have to find a way to coexist with that interim market volatility.
Well, what's your outlook for the BOJ's rate hike path looking forward?
So the Bank of Japan has made very clear that we're not yet at neutral. And what we're going to see sooner or later is additional rate hikes. How many rate hikes? Well, that also depends on inflation and inflation expectations. So I think what we've seen on the longer end of the JGB yield curve is that there is some suspicion that that inflation might be a little bit stronger than markets supposed prior to Takaichi coming to power, and perhaps the potential for fiscal expansion also works into it too. So it's possible that the Bank of Japan, if anything, might have more rate hikes that they might have to implement coming up than if that might be the case without the additional fiscal stimulus.
All right, Naomi, thank you for your analysis. Naomi Fink, Chief Global Strategist with Amova Asset Management.